The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, we had a bit of a down day in the grain and oilseed trade on Tuesday. Moderate losses across corn, soybeans, and wheat. Wheat was probably the downside leader there. And heavy losses in the cattle trade. Was that tied to this HPAI outbreak in Kansas and Texas? Or was it something else or a combination of multiple things? Hogs were a little bit mixed on the session. We're going to talk about things here on the show today. Joining us now for a conversation, Jacob Burks with agmarket.net. Jacob, it's always good to talk with you, my friend. I hope you're doing well.
Well, I'm doing good. I'm going to make it, I think. The 130 buzzer or the 120 buzzer rings, so we can catch our breath right now and see if we can analyze a little bit of what happened today.
Yeah, no kidding. It just felt like, in the case of grains, and I want to talk to you a little bit about get ready for Thursday's report here, but it just felt like overall Tuesday, we just kind of took some profit. I mean, not only do we have these big reports on Thursday, but it's the end of the month, it's the end of the quarter. I'm going to attribute it to some position squaring across the grain trade on Tuesday, Jacob. Do you agree?
Yeah, absolutely. I mean, you got to look at it. We had a 7-cent lower day, and we did damage some charts. I think that's probably the most negative part of today's, the most disappointing part. I mean, to see the market come up and have a 30-cent rally off the bottom here in the corn market on a kind of a V-shaped bottom, to see a pullback, 7 cents of this size, that's not the end of the world. You're going into a report that's going to be very volatile. You've seen the funds start buying back some of their short positions, and then we have a day like this. Bean market didn't really fall out of bed whenever you feel like it had the opportunity. The momentum was down. You saw livestock just crashing. But reality, the close below the 10-day moving average in the corn contract, a little bit disappointing. And just the opposite in the beans, we did hold some of those short-term moving averages. So we have a little bit of a positive support story there. But I would say, since we've made that move up and we've started that rally in this corn market, that 10-day, we've traded below it, but we haven't closed below it. And I think that was probably the more disappointing story here today, and I think that was reflective in the attitude of the producers too. Just sitting here in this office and talking to producers all day, there was a pretty big negative tone after we continued to push down today, and I think some of that negativeness is carrying over in the fear of what's to come here, and especially with the report on Thursday.
Yeah, that fear of what is to come potentially. Let's talk about that a little bit. Gearing up for these grain stocks and prospective plantings numbers, they're always a challenge, Jacob. We can't really outguess the report, so to speak. We just kind of got to prepare for what we expect. And let's talk corn intentions first, and look on the video feed, a couple charts you provided for us here today. I mean, we're getting everyone's estimates out. I know Ag Market, you guys put out your estimates last week. And just talk to me about what is some of that chatter you're hearing in terms of what we could see that mix between corn and soybean acres, Jacob. Let's talk about that.
Well, it's this time of year. I think, it's that March Madness time, Jesse. And when you look at my brackets that I've filled out, I feel like this corn guesses on this planning intentions report. I think it probably has sometimes has the same amount of credibility as my professional guesses in the March Madness NCAA brackets. But when you look at the corn market, we were sitting here talking about it, and we always want to look at, okay, what's happened? And I wanted to compare it to the what we've seen in the from the forum to the planning intentions to the final numbers, and you see that there's not a lot of correlation here if you look at the last 5 to 10 years really of what's happened in the corn market. The light green is the forum numbers that we saw in February. The dark green is what we come out with planning intentions, and then the blue is what we saw for final numbers. And you can see the last couple of years we've seen some pretty wide variations between where we started out, what we came through this planning intentions with that. The planning intentions always being right in the middle of it. And so one thing I want to bring to the attention is we also went back and looked at, okay, what usually happens if you go back the last 20 years of this report. Just go back to 2000. And so there was 9 different years where the result of this report was negative, meaning the price ended up closing negative on the day. Okay, so we looked at that and said, okay, what tends to happen for the next month? And because we're talking about strategies, we're talking about what we can do to help producers, protect their value and through this report. And when we looked at that, only 1 year did we actually recover from that. So meaning if we started out negative here after the Thursday report, after this planning intentions report, we had a pretty good tendency to stay negative, or even sometimes much more negative than what we had after the report. So our point was like, hey, I don't want to use any of these weekly options with this strategy. Okay, that doesn't mean that we can't rally into the spring or in the summer if we have heat problems. But for the shorter term, hey, let's use at least something that goes out a month, because it has a tendency, if it starts negative, to be rather negative. You look at the bean side of things, had just the opposite effect. It was kind of more of a short term. So we wanted to look at, hey, what can we do in more of a short term, maybe even using some weekly options to protect your production on the beans. And if you look at the bean chart there, you see that, hey, for the last couple of years, we've been below, the planning intention has been higher than what the final numbers were. I mean, can we take something from that? I don't know if you want to come out here and there's nothing I can do to really trade that. But the thing that you can say is, when we see that planning intentions, it's been the trend for the USDA to be on the high side of the planning intentions report.
Well, and thinking about this, and to your point, we could try to draw the correlations as best as we can, but I think this also speaks to, okay, weather, growing season conditions, changes, black swan events, things like that. There's so much that goes into this that once we get these estimates out, things could change over the course of a growing season, Jacob. So, yeah. I mean, you think about it, and I guess it kind of comes back to risk management and knowing your cost of production and your break evens here, and making sure that you're protecting that profit ahead of big reports like this. I think that's key here in this window. And I know, we've seen decent amount of farmer movement, I feel like, to town here in recent weeks with some of that price rally we've had. So, I mean, maybe some farmers have already managed some of that risk, but I just know that it's kind of key here in this window to make sure you're protecting yourself, right?
Yeah, and I'll a little bit more back on today's move today. I think a lot of this is the moisture that we've seen. The big talk this year has been, planting acres. That's always this time of year, but it's also, we know that this subsoil moisture is not charged up right now. And we saw a decent amount of rain come across, a large portion of the driest areas. That western Iowa got some decent rains, to a couple inches. So I think that moisture coming in at this point, it didn't hurt the market to back off a little bit today. I'm assuming that if you look at the commercials, you probably saw quite a bit of hedging today, quite a bit of producer selling, and I think that's the sentiment right now. Is we've seen a big move. I got some bushels I need to sell that are still in the bin. I haven't done a whole lot for new crop. I mean, that's the conversation I had repetitively over and over and over again today. And so, like I said, some risk management strategies. Hey, don't be scared to use some of these maize short dated in case we do get a big knee jerk reaction. I know when we put our numbers out there, we're in that 91.5 range. When I finally saw the average guesses come in at 91.7, I was kind of relieved, because the first few private analysts I saw came out was 92.5, 93.5. And if we see those type of numbers, you'll probably see a knee-jerk reaction from the market. So don't be scared to use some of those shorter-term stuff. But man, there's tons of stuff out there you can use to get you past the July time period, the pollination period, so where you can say, hey, what is out there? What's this weather done? What do we have in the ground that can give you a really good opportunity to lay some floors in this market? And I know it's not ideal. It's not what we've seen in the past 2 years, but you can't market your grain like you should have last year.
No, that is a great point. You cannot market like you did last year. And I know this too, or well, from what I've been hearing, Jacob, from folks, there was a lot of fall field work done in preparation for corn planting. I've been saying this, I've been trying to condition folks, hey, you might want to prepare yourself for a bit higher corn acre number than USDA has thrown out there previously, or what folks you're expecting, somewhere in that 91 to 92 acre mark. I think, Jacob, you guys are on there. I think we're going to see more corn acres than what some people previously thought, just with the way the fall shaped up, right?
Absolutely. I mean, I know locally around here, I mean, if you look at that drought monitor, we're really close to the dark red stuff, but if you go, just east across the river there, go west across the river and Iowa, you got a lot of guys that had a lot of stuff to do, a lot of opportunity, a lot of time to do stuff because we did not get those fall rains. Got harvested, got a lot of field work done, got a lot of anhydrous put on. I know those acres aren't going to change around a whole lot, but I think taking this report with a grain of salt is wise, because this is what was intended. I think the first week of March is when they take these surveys, a big wide swath of surveys, but it's a planting intentions report. And you go and you look back at all the field work that was done, all the preparation, and you have to ask yourself now: has times changed with what the producer wants to do? I know it's a big tendency right now to start planting your beans earlier. I mean, that's something that's changed over the last 5 years. Okay, but the American farmer still likes to put some corn in the ground. And as the opportunity arises, and if we do have that good planting season, it seems like the corn just keeps going in. So between now and that report that we see in June, this market will have an opportunity to bounce around. Put yourself in the strategies though that will allow you to take advantage of that. Have orders working. I always tell guys, if you don't have an order working, you don't have a marketing plan.
We are talking to Jacob Burks with agmarket.net here today on Market Talk. Jacob, let's go over to livestock trade, cattle. Really rough day in the cattle trade Tuesday. A couple down days here. I felt like Monday was probably tied to that cattle on feed report from last Friday being fairly bearish. That placements number was high, but then we got this news on Monday of HPAI found in dairy cattle in Kansas and Texas, and it seemed like Tuesday that maybe spooked the cattle market to some degree, and we broke through some key support levels, and the race was on to the downside. It felt like. Your thoughts on cattle trade Tuesday? Was it the HPAI? Was it the cattle on feed? Was it a combo of the two? I mean, what do you think, Jacob?
Jesse, I'm not an expert on disease in cattle in general. I can tell you that I was not trading whenever BSE hit. I know, but whenever you start talking about unknown things in cows, it gets very, very scary. I mean, you look at, okay, is that going to flood cattle to the market and all of a sudden put too much beef in there because we start culling these cattle? Or does it decrease the confidence in the consumer to know that, oh my gosh, there's a problem in cattle? So how that affects the market, I think is sometimes very questionable. I don't think today had anything to do with that. I think that we looked at a report on Friday that told us that we have kind of what we knew. We had held cattle back. We had high placements. We had 110% of last year. Now remember, last year was also 95%. We didn't find just a whole lot of extra cattle. Yes, we've imported some cattle. We probably rushed some, or held some back, and it just made that number pretty big. I think what we have to focus on is we've been building a lot of this, and it was kind of sitting on a house of cards. Okay, we got the question mark of higher weights, which have been unseasonal. You've got some record high prices out in the country with cash, and you got the kills backing off. So you got the three things that the formula goes together. It doesn't add up with cash still staying so much higher. And we've had records last week. I have if you look at what the sale barns have done even today, you got some of these feeder cattle that are really backing off. You're going to start seeing some prices probably fall off in some of these live cattle. But I think the futures market is saying, hey, we just don't trust this. We feel like there's going to be a need for a pullback. Even with the beef trading up here, over $300. So. I think there's still a lot of questions, but the futures market here just kind of gave up, spilled over. And when you're trading in thin markets like this, it can go a little bit further than what it's supposed to.
Well, Jacob, on the hog side, it's been a fairly decent start to the week. I know we kind of ended mixed on Tuesday, but hogs feels like we've gotten a little toppy here, top heavy around this $100 mark in summer hogs, but yet this market's holding in there. Quarterly hogs and pigs numbers out Thursday as well. There you go. More data being thrown at the markets this week.
Right.
Your thoughts on this hog trade? I mean, are you feeling good about it? Are we a little nervous with hogs right now? What do you think?
I think anytime you see a supplementary product like the beef cattle market fall off like this, I think it's got to make you fearful. I give it an A+ for effort today. I was at any time looking over at the hog market and expecting to see something pull back, but realistically, the cash has kept it up. The pork cutouts have stayed strong enough that these hog prices have been able to stay up here, and the processors have been able to continue to find profitability, and it's kept it strong. But yeah, I get very fearful whenever I see cattle market. For them to separate this much, with this strong of a move, was really surprising me that none of that really flew over into the hog market today.
All right. All right. Good thoughts. I know we had the bridge collapse in Baltimore too early on Tuesday. Such a tragic, catastrophic situation. Doesn't feel like that necessarily had a market impact. Not a lot of ag commodities move out of there. It's more trucks and cars, and there's some ag equipment, though, things like that. I guess, real quick, it doesn't feel like that has had a substantial impact on the markets per se here today, has it?
No, you're right. I mean, I think a big part of that was because it happened at 2 o'clock in the morning too, and the catastrophe that it was could have been much worse. Yeah, definitely. Just as you start looking over things and the rescue attempts and stuff like that, it was just amazing to watch. But I would say that I was watching for the rest of the markets, the stock market, anything like that, to be really affected by that, and really from an export standpoint. I think we export corn wise like 6 million bushels out of there, and then beans was like I think 90. I think is what I saw. So a very very limited amount of grain or any type of oil seed that's going to affect us directly into the Midwest. But we actually import more in there. So in a weird way, it could actually help us if the ports are having a problem importing some of the soybeans from South America. So I'm not an expert on that, but it is something that affects the United States. It's something that's a big catastrophe that can really affect us. But right now, at this point, I don't see that flowing over in any of the ag commodities at this point.
All right. Well, of course, I know we're thinking about everyone affected by that bridge collapse. Jacob, as we wrap it up here today, I know if folks have questions about the markets, they can reach out to you and the team there at agmarket.net very easily. And I know you guys getting ready to roll out your newly refreshed app here just a few days, I believe, right?
Yeah, it'll be. I've changed it to the 1st of April. Whenever you deal with technology, things can change quite a bit. But we do have some awesome technology coming out. And we'll have a report right after the Thursday report as well. That'll be on our website. Just check us out at agmarket.net.
Fantastic. Jacob Burks with agmarket.net. Always good to chat with you, sir. Have a great week, and we will talk to you soon.
Hey, thanks for having me, Jesse. Appreciate it.
That's going to do it for the show today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.